Well, after 8 straight up days for the Dow Jones Industrial Average, we finally did get a pullback here today. It was a pretty good sized pullback, but things could have been worse. We closed well off of the lows of the day. So we're going to review what that means for our market posture. I do also want to kind of circle back around to the news story I mentioned in yesterday's broadcast, which is this Supreme Court ruling on sports betting and what that can mean for some different investments that are out there. So with that, let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It's May 15th, 2018. If you're new to the video, welcome aboard. We're grateful to have you here in our audience today. Remember, you can always subscribe to our YouTube channel by clicking that red subscribe button. You can also leave us a comment and give us a thumbs up if you look a little bit further below. And then lastly, we do have a description area that allows you to sign up for our email distribution list. So feel free to sign up for that. If you haven't done so already, not only will that entitle you to the various updates whenever we release these videos, but it'll also let you know which stocks have overbought and oversold clusters within the S&P 500. Now, in addition to that, we're on Twitter, and boy, oh boy, did you guys step up for me yesterday on Twitter. Thank you so much. I knew you had it in you. I was mentioning in yesterday's broadcast that we were just shy of 100 likes the last time I did the video, and I said, I think you guys can do it. I don't think I'm asking a lot out of you for doing that. And of course, you guys came through with flying colors. Last I checked, we had 225 likes. Before that, I don't think we've ever had 150. So you extra 100 people that came out of the woodwork, it has been noticed. We certainly appreciate that. And as I mentioned yesterday, we'll continue with this philosophy throughout the rest of the week. As long as we get at least 100 likes by the market close, I will plan on doing the video for that day. It's up to you and your clicks on determining whether I will come back day after day this week. In addition to Twitter, of course, we are also on Facebook. Make sure you're joining our group there. If you want some additional insight beyond these videos that we give you, you can see the group web address on the screen in front of you. All right, with that, let's go ahead and get into a little bit of analysis here of the markets themselves. As you can see, I've got the S&P 500 pulled up in front of us. And as I mentioned before, we actually had a pretty good-sized down day. Now, you'll recall in last night's video that I mentioned that the Russell 2000 was kind of flashing a peculiar sign to us yesterday. It was the only one of the four that was down. We also had what I described as an indecision type of a candle on the S&P 500, and you can kind of see that right here that I'm pointing at on the screen. So we had a few heads up that potentially we were nearing the end of this mini run that we've been on for the last week and a half or so. So it's not a huge surprise to finally see us pull back. Remember, it's not normal for the market to go up 8 days in a row. So this is not something that is unheard of, as mentioned in yesterday's video. The first day the market opened after 9/11, the Dow Jones was down 7% in one day. So the fact that we're down 0.7% today is not a big deal when you're thinking about true perspective there. As it stands, you will see on this candle that we had a long lower shadow there. And what that is telling you, for those of you that aren't familiar with candlestick analysis, what it's telling you is that we were trading a lot lower in the session at one point. The bulls didn't just lay down and let the bears walk all over them. The bulls kind of picked themselves up and pushed the market higher at some point during the day to close it at a better level than it would have otherwise. So yes, we were still down today by 0.7%, but at one point we were down a full 1%. So kind of a mixed bag there. You can see clearly our market posture remains bullish. Despite one down day, we're still in the upper reversal zone with that green intermediate term line there, and that's the one that we generally use to set our posture using the market forecast indicator. You'll also notice that we have a green moving average. In this case, this is a 30-day moving average. Remember, you can always see the time period of the chart that I happen to be looking at in the upper left up here. It says 3-month, 1 day up there. And for those of you that have gone through my charting tutorial, for those of you that are premium subscribers to Market Scholars, you can always follow along with David and I when we're going through our analysis by looking at that pink label in the upper left as well. I happen to be on chart 1A at this particular time. So despite the 1 day pullback that we had here, things are still reasonably solid from an intermediate term posture perspective. Let's go ahead and take a look at our next chart. This will be 4B for those of you that are following along at home. And as you can see with this chart, it's kind of the same thing across the board. Now, the Russell 2000, interestingly enough, actually closed flat today. So that was the one I was mentioning yesterday. That was the only one that closed lower. Today, we did have quite a big little pull back there at the beginning, but then by the end of the day, just like the S&P 500 and some of the other indices, we actually had a rally into the close. And so that might be a small saving grace in this situation right now. You can kind of just eyeball the charts right now and see that we've rounded a top to a degree. A lot of times we don't just have one-day pullbacks. You know, for those of you that have been following David and I's analysis over the years, you'll know that we used to work with one another at our prior company, and we used to joke that whenever David would go on vacation, the markets would all of a sudden decide to get bearish. So it is somewhat interesting that, of course, David's on his 1 week vacation this week, and if it leads to further downside pressure on the market, we'll all kind of beg him to come back home as soon as possible. So as it stands, we do have bullish postures on all 4 indices despite some of the turbulence we've seen in the last 24 hours or so. All right. Oh, and one other thing I was going to mention too. Let me pull up the chart of the Dow Jones. Now, there's a lot of different ways you can zoom in. A lot of times what I like to do is right-click and go to Maximize Sell. But you can also kind of double-click in some of these blank areas up here. I also believe that you can come into, where was it? It might have been in, is it Style? Maybe it is Settings. No, it wouldn't be Settings. Let me check Studies. Well, it caught me off guard here. There is a way in one of these drop downs where you can expand it and maximize it as well. Again, I don't usually use it because my preferred method of doing that is just simply right-clicking on the chart and going to Maximize Sell. So just the point being, there's a lot of different ways you can go through that if you want. But what I wanted to show you here by looking at the Dow Jones Industrial Average is that we have a bullish intermediate confirmation signal. Now, I kind of went through yesterday what that bullish intermediate confirmation signal meant and how it was set up using the S&P 500 as an example. But what I didn't mention yesterday that I will mention today is that although the blue line is not technically part of the bullish intermediate confirmation signal, we do like to use it to kind of judge whether the trade is better or worse. And what I mean by that is if we have the blue line come down and close below 50 but above 20, on the same candle where we're getting that bullish intermediate confirmation signal. So again, we have that red line in the lower reversal zone, that green line is bullish. So we do have a bullish confirmation, intermediate confirmation signal on the Dow Jones. But what we didn't have yesterday with the S&P 500 was that blue line below 50 and above 20. It was somewhere much higher on the S&P 500. In fact, I could probably, another thing you can do to rotate through these grid charts, you'll notice these arrows up in your upper right. There's a left arrow and a right arrow. This is after you've zoomed in on one, by the way. So if I want to go back to the previous chart, you can see I've just done that right there. Well, notice if I kind of zoom in, let's pretend like this candle today does not exist, and let's go back to yesterday. You'll notice that this blue line was not below 50. It was basically right up here, just a hair below 50, somewhere in that area. Actually, I could figure it out real quick. Yeah, it was 79.68. Remember, you can get that number over here, this blue number, when you're pointing at the candle that you want the reading from. So it's 79.68. So again, we come back over here to Dow Jones. Let me go to the right arrow now to go to the next cell. There we go. You can see that the blue line is just a hair below 50. In fact, as it stands right now, this label over here, since it's today's candle, will tell us what the reading is. It's 49.23. So in other words, this is a slightly better setup for the bullish intermediate confirmation signal. This is the one where when you have a normal breathe in, breathe out process by the market, that we had enough of an exhale on this type of a pullback right here. So this one might be a little bit more of a valid signal today than even what we saw there yesterday. All right, let's take a look at a few more charts here. Let's look at the 3 green arrows chart since we didn't look at that one yesterday and just kind of see where we stand with that particular setup. As you can see, we've got these green boxes, shaded boxes on the charts right here. So 1, 2, 3, 4 on all 4 of our indices. And what that's telling us is that right now we do have 3 green arrows on all of our major indices. So the size of the box is determined by how many days it's had 3 green arrows. The box starts shading it green on the candle that gave us the 3 green arrow signal, and it continues to be green until one of those candles goes red. So at this point, hang on just a second here. Let's wait an hour on that. Interesting, 2 days in a row I've got these little pop-ups saying that I need to update some of my software. So we'll do that after the video here today. So anyway, we got 3 green arrows, and so that's yet another bullish sign. Again, it doesn't mean that we can't go down for another couple of days right now, but it just means that from an intermediate term perspective, if we're to look out 2 to 3 months, we are in a reasonably bullish setup right now from a technical analysis perspective. All right, let's do a little bit of intermarket analysis here today as well on our 12 grids. And as a reminder, I do have to kill that camera feed in order for you guys to see all 12 of these charts. So as you can see here, we've got a mixed bag of bullish and bearish charts. As a reminder, when we're looking at these 12 grids, when we have a green background, that suggests we have a bullish intermediate posture. Okay, so as a reminder, you can also see the label is called intermediate right now. And so as an example, if you're above 80, it's always going to be bullish. And so that's why TNX happens to have a green background. Let me see if I can find another one. Yeah, here would be an example, muni bonds in the middle and off to the left, that you can see that the intermediate line is below 80, but because it's rising, we still view that as a bullish posture. So that's why that one is green. Okay, so with that out of the way, you know, as we're looking at these different storylines that are affecting the marketplace, take a look at what's going on with Treasury yields. My goodness, we had a huge update. Now, some of you are going to look at that and say, well, 2.84%, is that really a big move? All you need to do is look at the size of that candle, right? Let me double click in this blank area right here. There we go. And you can see this thing just blasted off to the upside. That's clearly the biggest up candle on the chart. I'd say the only one that even competes with it is probably this one right over here. The range on that candle was 66 cents, and the range on this candle is 72. So indeed, this was the biggest up day range that we've seen in the last 3 months. You'll recall that the last time we had a big move would have been right around here, and that's when interest rates were right around that 3% level. So kind of interesting to see that we're back in the mode of rising rates all of a sudden here again. Now, remember, that causes reverberations across a number of different asset classes. One of them would be preferred stocks. It's part of the reason I kind of construct the 12 grids the way that I do and have some of these next to each other so they're easy for the eye to kind of see. And you'll notice that preferred stocks were down significantly today. You'll also notice that long-term government bonds were down significantly today. Both of those were down. You can actually see that foreign bonds were down and junk bonds were down as well. And so, you know, as many of you are aware, when interest rates go up, bond prices go down. And so it's not a huge surprise to see many of those asset classes, including preferred stocks, which oftentimes emulate bond prices, also struggling here today. And all of them do have bearish postures at this point as well. So as we look at a few of the other charts, gold fell out of bed today as well. But notice that gold fell so hard here today. Let me right click and maximize this cell, that we did produce a oversold cluster signal. And that occurs when we have kind of the green, the blue, and the red lines all in the lower reversal zone on the same day. Now, the last time we had one of those was right back here on May 2nd on this candle, and we did get a little bit of a reversion to the mean after that. So remember that these clusters occur, these ones with the green dots occur after a market sell-off. So you can see we had a huge market sell-off here in gold, and then we had that reversion to the mean after getting that signal. So it's entirely possible we're setting up for another reversion to the mean type of a move there. But as I mentioned in yesterday's video, part of the reason that we're seeing struggles in some of those commodities over here, look at the US dollar. US dollar up yet again, new 3-month high with UUP. Let me right click and go to maximize sell on that one. And you can see this is a kind of your interesting bull flag type of a setup that we're seeing right here, about 4 or 5 days to the downside, and then boom, right back up into that move. And so we'll see if this can create yet another flagpole going forward. But that was certainly a big, big up day there for the US dollar. And remember, when the dollar is strong, it typically forces the commodities to be weak because commodities are priced in dollars. The peculiar thing that I mentioned yesterday is that it hasn't really slowed down crude oil itself. It has slowed down gold. It has slowed down agriculture commodities, but crude oil is kind of dancing to its own tune right now, whether that's kind of some supply issues, whether it's geopolitical news with Iran or what have you. But what we do know is that crude oil is continuing to be strong in this kind of late cycle move that we're seeing right here. Let's take a look at a couple other 12 grids while we're at it. Let's go to the foreign stock markets 12 grid. Now, one of them I do want to point out here is Germany, and that's in your lower left-hand corner over here. Reason I'm pointing that out is just merely to point out the fact that we do have a bullish posture on Germany right now, and my trade application example is actually going to be a German stock today, mixing things up a little bit and going with a foreign company. But before we get to that, let's do a little bit more analysis. Normally what I'm looking for on these various charts is just trends. Notice one of the trends that is kind of peculiar is Brazil in the upper left-hand corner. Now, the reason I say it's peculiar is because that looks like death. That chart does not look very healthy at all. Clearly a downtrending 30-day moving average, clearly lower highs and lower lows along the way. What's peculiar about it is that we actually have a bullish posture on it right now. Now, remember, if there's enough price damage, that will eventually change. But right now it's at 24.69 and rising. Let me right-click on that. Go to maximize sell, and you can see that this intermediate posture line, the green line down below, just recently emerged out of that lower reversal zone. It had been bearish for quite a bit out of the last 3 months, but just recently gave us a bullish posture. We did have a nice looking candle by the end of the day. Yeah, we were down over 1% in Brazil, but keep in mind that we closed near the highs of the session right there. I think I did hear that we're exhibiting more trouble out of Venezuela and Argentina here today, so maybe Brazil caught a little bit of a sniffle off of their neighbors' cold that they're suffering right now. So as we look at the charts, any other good looking trends out there, same ones I said yesterday. Canada and United Kingdom are the two that probably have the best looking upward types of charts right there. Let's now take a look at the sectors. And the one I want to point out here is, let's see, sector right there. In the upper right is the discretionary sector. Notice that it is bullish. It's got that green background. Its intermediate term line is at 91 and rising. So reason I'm pointing that one out, same thing with Germany. Our trade application example today will come from the discretionary sector. Some of you may already be guessing what stock I'm going to be talking about if I'm talking about a German discretionary stock that has something to do with the news story of sports betting yesterday. But if not, I'll keep on feeding you hints until we get there. How about that? All right. As you can see it with the various sectors here, most of them are bullish at this point. Remember, the S&P 500 is in the upper left. That one has a bullish posture right now, and the 11 charts that follow it are the various sectors that make up the S&P 500. So one thing I should point out back to our conversation about Germany, remember that XLY is tracking only the US-based companies. So I can't necessarily guarantee that the discretionary stocks in Germany are doing very, very well, but it very well could be the case just because a lot of times we find markets are reasonably correlated to one another. Now notice down below, back to our conversation about interest rates, look at what happened to real estate today. Real estate got kicked in the teeth, down 1.7%. So for those of you that have been with me long enough, you should know by now that there is an inverse correlation between interest rates and REITs. And usually the same thing exists with utilities as well. And indeed, that is the case here. Utilities were down 0.84% today. A couple of our worst performing sectors, again, direct reflection of what's happening with rising interest rates there. And then, let's just take a look if there were any up sectors here today. There actually was one. Energy, believe it or not. You just cannot get in the way of that freight train right now. It seems like everything energy related seems to have the magic touch right now. Let's go ahead and do a little bit more analysis. Let's see. Let's pick out. How about a chart on volatility. Let's do 4K for those of you that are following along at home. And let's just kind of see what's setting up here today. I did have a comment that you guys like looking at the VIX, and in particular the VIX to VXV ratio. So notice down below where we're at with the VIX VXV ratio. We're at 0.93%. So for those of you that aren't aware, you can also read that directly in the label over here. Sure, you could kind of eyeball it off to the right here if you wanted, but the more precise way to read that would be in the label right over here. So 93 we don't really consider an extreme level. Remember, at one point here today, we did have the S&P 500 down over 1%. So this particular red kind of block that I'm pointing at right here would have been touching that blue line if it closed at the lows of the day, because that blue line will represent a 1% move lower. But as it stands right now, it did pop a little bit by the end of the day, and I'm looking at SPY, kind of a surrogate for the S&P 500. Anyway, we kind of saved the day to a degree there. Let me just quickly go over here to the VIX chart. I know we have a separate one broken out for that. There we are. 4N is that chart for those of you that are following along at home. Again, you can look at that in the upper left. And what we're looking at here is we're kind of stuck here with the VIX to VXV ratio. Notice that we're right here at 93, and it's in between these two brown dashed lines. We view that as neutral zone right there. We have extremes up here with the orange line and extreme down here with the blue line, but where we stand right now is actually kind of smack dab in the middle there. So not a whole lot to report from that perspective. No surprise to me that the volatility index was up today. It was up about 13%. Anytime we see the stock market go down, we typically will find the VIX going higher. Now, what does that mean from a practical perspective for those of you that are practicing trading options? Well, it means that premiums are becoming juicier. For some of you, that's a good thing. For some of you, that might be a bad thing. Remember, if you're selling premium, higher implied volatility could very well be a blessing for your trade if you're selling it after volatility is already high. So if you haven't sold any premium yet, it's better that you did so at the end of today's session than at the end of yesterday's session. On the other hand, some of you that are buying calls and puts out there, remember, your options are becoming more expensive the higher that the VIX goes. So we're not really in any sort of extreme condition here, despite a fairly good sized pullback today in the S&P 500 and a big move up in the VIX. Remember, we're still at only 14. That is historically very, very low. I think that's pretty much what I wanted to go through with you here today. Let me just make sure. Let's take a quick peek at the yield curve while we're at it. Let's take a peek at the yield curve, because this has been another thing that's been in the news. We did get up to, let's see, on the 10-year yield. Remember, that's this one right here. Notice that we're at about 3% on the 10-year yield right now. 30-year yield is at about 3.13%. So we're starting to inch our way higher and higher and higher on those different maturities. But down below, you can kind of see the yield spreads itself. Now, this is the 10-year, 2-year Treasury yield spread that we're looking at here. And basically, as you see this blue line drifting lower and lower towards that pink zero line down there, that's telling you how close we're becoming to getting an inverted yield curve. You can see as just an example over here, the last time we had an inverted yield curve would have been during this period of 2006 to 2007, where you see a couple of those times where that blue line is below that pink line down below here. It's at that time, of course, that people will start getting a little bit more nervous that we might have some sort of economic turmoil in front of us. Now, this one took a couple of years to play out, but ultimately it did play out in a big way. 2008, 2009 was not a stroll through the park by any measure. So we'll keep our eye on that. Be aware that we're basically at our lowest levels on the 10-2 yield spread, going all the way back to 2007 at this point. So that is worth mentioning in a presentation like this, because we're going to keep our eye on that in case that is a forewarning for the market at some point if we do get to an inverted state. All right, so I think that's what I wanted to kind of review with you. Oh, there was actually one more thing I wanted to bring up. Again, thank you to everybody who clicked like yesterday. 225 at the last count of you clicked like. And so as mentioned, as long as I'm getting at least 100 down there, I will plan on doing these market outlook videos the subsequent day or the following day. But what I wanted to point out while I'm over on the internet here is some of you attended my options class earlier today. Options for long-term investors is what that particular class is called. For some strange reason, WebEx is not giving me the recording yet. And so I know some of you have been hunting for that on our website, and this is of course only for you folks that are our premium subscribers that have access to our live classes. But I just wanted to point that out because I know I'm going to get a bunch of emails, hey, you haven't posted that class yet. And it's not because I don't want to post it, it's just WebEx for some strange reason has not allowed me to receive the recording yet. You can see that the last one they gave me was my class from yesterday, the sector-based trend trading account where we do our top-down analysis. But today being May 15th, I keep on clicking my event recordings. It's just not popping up here for me. So this doesn't happen very normally. It has happened a couple of times in the past. Generally, what does happen in a case like this is there's something wrong on WebEx's end, and they will end up giving us the recording the following day. So I do apologize for those of you that wanted to watch that here today. It may not be available for you, but as soon as I see it available for me, I will get that posted on our website for those of you that are premium subscribers. Okay, let's now get to our trade application example for the day. And so let me come on over here to, let's use chart 2A for right now. Let me see how this looks. And what I wanted to do is kind of show you guys some of the things that have been happening since we've gotten this news out of the Supreme Court saying that the states could allow gambling, sports gambling. That's a pretty big change of pace. You know, up until this point, it's largely been Nevada and Las Vegas in particular that's allowed legal sports betting. Now, all of a sudden, it's possible that all these other states are going to get into the act as well. So just wanted to kind of show you some of the reverberations of that news that did hit yesterday. Notice that Las Vegas Sands was up today, 0.5% on a day when the market was down. I think MGM was down, but I think yesterday it was up. Yeah, it was. Yesterday it was up. Let's take a look at Wynn, see how we're doing there. Wynn really didn't react to this necessarily so well. I believe BYD is Boyd Gaming. Yeah, there's Boyd Gaming. And take a look at Boyd Gaming. It's really kind of starting to make a move right here. So keep your eye on Boyd. Remember, that's more of a kind of a regional casino company, and they don't have as big of exposure to Las Vegas as some of those other big name companies. And therefore, if they do have exposure to other states, they might actually benefit by fewer people going to Vegas to bet legally and more people going to their local establishments. So keep your eye on Boyd. But in addition to that, I happen to notice that lots of sports-related stocks were doing well ever since that particular announcement was made. Let's take a quick peek here at Nike as just one example. Notice that Nike was up almost a full % here today, despite the market and the Dow Jones in particular being down. So clearly, Nike was bucking the trend. I believe Nike was the best performing stock in the Dow Jones today. Let me just verify that by coming over here to the Market Watch tab, coming down here to Public, and going to Dow Jones Industrials and sort it. Yep, indeed. Nike was the leader of the 30 stocks in the Dow Jones today. And again, I don't think it's a coincidence that this sports gambling vote was held there yesterday and approved. In addition to Nike, take a look at what's going on with Under Armour. Under Armour was up 2.4% today. Again, that might not seem like a big move, but keep in mind context. The markets were all down today. So Nike, Las Vegas Sands, Under Armour. Also, if you go to a stock that very rarely gets discussed, MSG, this is Madison Square Garden. Of course, they have all kinds of sports property rights there in New York City. And take a look at what's going on there. 2 straight candles to the upside. Those are big moves. In fact, notice that yesterday we had this huge candle move. We get this corresponding black arrow on the candle down there telling us that the move was more than 1.5 times average volume, and that most of that volume was considered bullish. That's why most of that candle down there is colored in green, and just a small sliver of it is colored in red. So the bulls were out taking advantage of that Supreme Court ruling. in a stock like Madison Square Garden. So kind of interesting. All of a sudden, sports-related names have caught a bid, kind of out of nowhere. Also mentioned SG. We talked about it yesterday. Scientific Games. What was the ticker symbol there? Scientific Games. SGMS. And you can see that SGMS just broke out in a big way yesterday as well. So a lot of different names picking up a little bit of investor interest despite the chaos of the overall markets. Those could be some interesting plays going forward. So what I thought we would do today is take a look at a company we've never talked about in this video before, at least to my knowledge, and that is Adidas. I told you before, some of you probably guessed what I was going to talk about if I was talking about German stock in the discretionary space that was sports related. Well, here is one. And notice that Adidas, now first of all, this is a 5-letter ticker symbol. This is not a very popular ADR here in the United States. It's traded over the counter. Remember, there's plenty of popular ADRs here that usually have 3 letters in their ticker symbol, but the ones that have 5 generally are traded over the counter. So just be a little bit more careful here. One of the things that you have to know about this is that this particular stock is not going to give you any sort of options trading capabilities. Remember, Adidas is a huge global company. It's one of the top 3 footwear companies on planet Earth. So it's not that there's not enough interest in providing an options related market. It's just that the vast majority of this company's trading is done over in Germany itself. It's not done here in the United States. We're kind of a secondary market for them. But the reason that it kind of caught my eye is Adidas actually has a oversold cluster as of today. Notice down below, we've got all 3 of those market forecast lines in the lower reversal zone. So it corresponds with this candle here today. Well, take a look at what happened prior to that. We had an overbought cluster that was kind of giving you a warning signal back here on April 17th. So we went from overbought cluster in a straight line down to an oversold cluster. Now, not only that, but notice on this particular chart, we've had 2 other instances of oversold clusters in the past 6 months. We had one right here, and you'll notice that had you been a buyer of this particular stock right around that time when it gave you that oversold cluster, that you would have been very happy to see this stock jump as high as it did, because it basically went from 105 up to 133 before it topped out. We also had another instance of that oversold cluster over here, and this one wasn't quite as emphatic as the other one, but still, you can see that it basically called the bottom. Remember, the idea of those oversold clusters is that the selling has become so extreme that the chances of a reversion to the mean are greater than they normally would be otherwise. Now, one other thing I'll just kind of throw into the mix there, I'm not a big soccer guy myself, although my ancestors came from the great country of the Netherlands, and so I like to keep my eye on the orange when they're out on the field every couple of years. But other than that, I don't really follow it too closely. But soccer is becoming more and more popular here in the United States. Of course, they call it football all around the rest of the world. But it's becoming more and more popular. And of course, Germany has been a powerhouse soccer country over the years. And so I would imagine there's a lot of sponsorships and tie-ins with Adidas and a lot of those clubs that'll be competing for the World Cup championships a little bit later this year as well. So a lot of different things kind of going together with this trade. Oversold cluster, World Cup coming up, sports stocks across the board seem to be bullish. Germany continues to have a bullish posture, and discretionary stocks continue to have a discretionary posture. So what I thought we would do here today is kind of do an OCO bracket order. And what that stands for is one cancels other. And so what that means is we're going to try to buy this stock tomorrow in paper money, and we're going to try to sell it up here at this level where it kind of gapped down to. So I'm gonna target that area just a hair below the high of that candle right there. We're going to look at about 119.50 as our upside target, because it's very well possible that once it gets back up there, we'll start seeing some selling pressure again because of the theory of the gap down taking place and that establishing kind of a new resistance area. So we're going to target that level on the upside. On the downside, we're going to look at this last kind of intermediate bouncing area that we found over here, where we had that intermediate line bouncing out of that lower reversal zone, and that was down here at close to 105. And so if I get my calculator out here, I'm going to target 119.50 0.5 on the upside to sell if we're right and we win this trade. So I'm going to subtract out where the current price of this security is, which you can see over here is 111.79 is where it closed here today. So 111.79. And you can see here that that would be about $7.71 is what we're hoping to make on the upside. So if we want kind of a one-for-one reward risk type of a ratio, which we oftentimes shoot for when we're doing kind of swing trades like this, one easy way to go about that would just be to take this number 771 from where we're at right now, 111.79, and our bailout price, our stop loss on the bottom side will be 104.08. And you can see over here that that will be just a hair below where the lowest price was for this candle over here. This candle that I'm pointing at back behind here, the low price on that candle was 104.16. So our stop loss would be basically 8 cents below that. Now I use the term stop loss loosely because in this particular case I'm actually going to use manual alerts. When it comes to stocks that are trading over the counter, I'm just a little bit more leery of the fill prices that I would have because you can't really see level 2 quotes all that well if you're just an average retail investor like those of you that are watching this video are. So what I'm going to do is I'm going to try to buy this tomorrow, 100 shares of it at 111.79, and then I'm going to put in an alert up here at 119.50 and another alert down below here at 104.08. And that way I will get alerted whenever one of those two things occurs, and then I can go and work my order at that time as opposed to just firing it off blindly and hoping that the market makers take good care of me. So with that, let's go ahead and place the trade. So I'm going to come over here to the trade tab. And we're just going to do 100 shares on this. So I'm just going to click on the ask price there. And of course, it's just a paper money trade here. We're just testing ideas. And I am going to put this in at the closing price, so 111.79. And we'll just let that float for tomorrow. If it doesn't get filled, so be it. There's plenty of fish in the sea. So I'm going to go ahead and confirm and send that. All right, that looks fine. Let's go ahead and send that in. So we'll see if we can get filled on that tomorrow. And then if you want to set an alert, where you would do that is you can hover your mouse over the Market Watch tab as I'm doing right here, and notice that this alert area kind of pulls up below it. So I'm now going to click on alerts, and I'm going to type in ADDYY, which is the ticker symbol for Adidas, or Adidas, for those of you that like a distinct pronunciation there. And we can then take a look here at some of the alert features. I'm going to go ahead and click on, it doesn't really matter, you can click on the bid or the ask. I'm going to start with the ask here, and you'll notice it says price. Ask is at or below. And so in this case, we're going to have our lower side number, and we're going to pop in there 104.08. And I'm going to get notified with a sound and on my mobile device, which you can set up on your Thinkorswim platform as well. And I'm going to click on create. Okay, so the first one is setting up, and you can actually see it showing down here in our alerts book as well that we put that in correctly. So it basically says trigger, ask at or below 104.08. Okay, so the bottom side is taken care of. Let's now do the opposite side, the upside. So I'm going to click on the bid in this case. And in this case, it says the bid is at or above, and I'm going to change that to 119.50. That's my upside target in this particular swing trade. Again, we're going to get notified with a sound on the platform if that were to occur, and then they'll also shoot me a text on my mobile device. So I'm going to click that, and again, that is now showing up down below here in our order book. It now says bid at or above 119.50. And a lot of times they'll actually put those on the charts as well. Yeah, they did. So you can kind of see that here on the Thinkorswim charts. It shows my alert up here at 119.50 and my other one down here at 104.08. And this is all, again, making the assumption we actually get filled tomorrow morning, which we'll never know since we do these videos after the market closes. It's possible Adidas pops higher to start the day tomorrow and we don't get filled. So we'll keep our eye on that and see what happens. So in closing, I want to thank you for joining me here this evening. Again, thanks to everybody who has been clicking like on Twitter. You guys were rock stars for me yesterday, more than duplicating my minimum threshold there. So I'm your hired gun this week. If you want me to continue to do these videos, continue to click that like on Twitter. Keep up the great work there. As long as we're above 100, I'm happy. Hey, if we can get over 225 like we did today, I'm absolutely ecstatic. And as a reminder, markets continue to stay bullish despite the one-day pullback we've had here along the way. But kind of an interesting trade here regarding some of the sports betting news and some of the positive impact on some of those sports-related stocks out there. So with that, I want to wish you all the best with your trades and your investments. Goodbye for now.